And this is Bloomberg Technology. Coming up in the next hour, there are doubts brewing about Tesla's ability to secure funding to go private. Can Elon Musk take the deal across the finish line? Plus, has Apple peaked? One analyst has slapped the company with a sell rating, warning that 2019 could be disappointing. And Twitter at a political crossroads. Is the social media platform worried about angering conservatives? First to our top story, the Tesla saga continues for a third week as Elon Musk propels the company toward a possible rebirth as a private company. And he says he will not stop working at his current relentless pace. Still, board members and investors are growing more concerned about his health and stability. Digital media mogul Arianna Huffington has urged Musk to take some time off, tweeting, "Dear Elon, please change the way you work to be more in line with the science around how humans are most effective. You need it, Tesla needs it, and the world needs it." Musk responded, "Ford and Tesla are the only two American car companies to avoid bankruptcy. I just got home from the factory. You think this is an option? It is not." Joining us now to talk all things Tesla, New Street Research analyst Pierre Ferragu, who currently has a buy rating on the company. Also with us, Bloomberg Opinions, Liam Denning. So, Pierre, we normally don't talk so much about a CEO's sleep patterns, but this has become part of the news. You know, what do you make about his own admission that he's not sleeping, or if he's sleeping at the factory, and does that give you confidence or lack thereof in his performance?
Thanks, Emily. The first thing I would say is that we haven't learned that much more in recent days or in recent weeks. People who know Elon Musk, who know his work habits, know that he has been behaving like that for multiple years. And this is probably one tiny part of what makes him an exceptional individual. I think what we learned, especially in the interview he gave to the New York Times recently, I would qualify that as nothing new. He works very hard. His personal life is significantly affected by that. And this has been part of his success, his professional success, his entrepreneurial success in the last decade.
Perhaps nothing new for Elon Musk, but it is certainly unusual for a CEO to tear up in the middle of an interview with the New York Times. Liam, there are some recent developments in that the stock price has plummeted. Is it increasingly unlikely that Elon Musk could take Tesla private at this $420 a share price that he was initially proposing?
Yeah, I think, I mean, on its face, and we still lack so many details that you would normally get with this kind of thing. But on its face, it just seems unlikely that a buyer or set of buyers would come in and pay right now what would amount to about a 45% premium in order to take a minority stake in an unprofitable company, and that stake also be pretty illiquid too. I think the second problem that's kind of getting missed right now is that we still have a situation where it's looking increasingly unlikely that Elon Musk didn't have anything close to a deal locked down when he effectively told the market that he did, and that's just a problem that's still bubbling under here, and even if we did get close to some kind of a deal, that's still a problem for anyone looking at investing in Tesla.
The SEC, as we now know, it has initiated a rapid inquiry into what happened here, perhaps more quickly than they usually do. All this considered, Pierre, looking at the stock price now, you know, what odds do you give this of Elon being able to get this done?
I actually give odds very close to zero, to be honest. I remain very positive on the stock price, and I think Tesla is at a turning point. Is actually turning the Model 3 into an industrial reality. But I don't think this go private deal has wings. The way I interpret it is the following: Elon Musk is extremely incentivized to do it. That's really a personal preference. As a CEO, given his personality, given the situation with the investment community, it would be a great relief for Elon to take the company private. But let's face it, if you're an investor in the company, there isn't that much value in being taken private. As Liam said, there would be like a downside in terms of liquidity. And on top of that, the company would not benefit from anything tangible I could put in my company model, in my forecast, as a result of being taken private. So I think what happened, and I think it's important to put all these things in perspective against each other, is that a couple of weeks ago, Elon Musk had positive conversations with investors. Actually, it's more like at the back end of last month. On the back of that, he started thinking about a plan to take the company private. And then he tweeted the idea out. And then he realized his tweet was making him face like significant liabilities. And because of that, he started like a communication campaign. And I think the interview in the New York Times last Friday was part of that, trying to increase his chances to defend himself well against these liabilities. So I think he's now trying to push forward this idea that he's overwhelmed, that he's had like a very tough time, and that's going to probably come into the negotiation with the SEC and in civil lawsuits to defend the fact that whatever he has done, he did it in good faith. Going forward, the deal is not going to happen because investors are not going to see value in paying a premium to the stock price and giving away liquidity.
Meantime, Liam, we've got new information about the Saudi Sovereign Wealth Fund, which Elon Musk has said was the party behind the part of the tweet that said funding secure. There are reports now that they are looking to take a $1 billion stake in another electric car company that would give them control of that company, Lucid Motors. They already do have their 5% stake in Tesla. But does that mean it's increasingly unlikely they'd want even more of Tesla?
Well, I think it's hard to say whether a 500 million or 1 billion investment in another car company would rule it out. But I think what this illustrates is the bigger problem of Musk's whole approach to this, which is, he put out the tweet and then sometime later we got this long explanation involving meetings with the Saudi Arabian Sovereign Wealth Fund, and he thought that a deal was in the bag. In doing that, he effectively handed Saudi Arabia a very effective tool to crush the Tesla stock price anytime they want by simply leaking a story about being interested or not being interested or looking at another company. It just shows the level of risk that Musk's approach has exposed the company to.
So, Pierre, if this doesn't happen, after all of this, do you see a big downside for the stock, or will investors be so happy you could see it rise back up? I mean, if this doesn't go through and you're not the only person to tell us there's a 0% chance here, what then for Tesla?
So I think that would be probably the end, the end of most of the ongoing storm. And probably the stock will go back to a focus on fundamentals. And we know well what the key fundamental controversies are on the stock. They are whether the company is able to stop burning cash early enough to avoid getting into a difficult liquidity situation. We know the company has $2.2 billion of cash at hand at the moment. And facing that is $1 billion of that is actually customer deposits that can go away relatively rapidly in a confidence crisis, and the company has refinancing deadlines in Q4 and in Q1 that are relatively significant. So the key question number one will be, can next quarter or the quarter after next Tesla stop burning cash? And then the next question, of course, is as the Model 3 ramps up in terms of production volumes, does the profitability of the Model 3 improve and actually follow the trajectory we expect? So once this deal is out of the table, Wall Street investors are going to focus back on fundamentals, and that's where we find our conviction on the stock, and that's where we have our buy rating on the stock.
So, Liam, if the deal doesn't happen, what does that mean for the future of Elon Musk? It would be a huge public, perhaps, embarrassment, to be sure. I
actually think it's more than that. I think there's a bigger question hanging over Tesla as a result of all this. If you go back to August 1st at the results call, Tesla claimed repeatedly that it was on the cusp of sustained profitability, cash flow, positive cash flow. It's just very odd to me that we went from that pretty bullish message to this rather bizarre episode about having the company taken private as a way to deter short sellers, because surely if the company is on the verge of that brighter future, that would be the surest refutation of the short thesis, and it would happen within 3 months. I think the biggest question for me is, why did we segue from the positive message to this strange episode so quickly?
All right, Liam Denning, Bloomberg Opinion, thank you so much. We're going to talk a little bit more about Tesla and this SEC inquiry later in the hour. Pierre, meantime, stay with me, because I want to mention that New Street Research has cut Apple to sell, citing material disappointment in 2019. You are leading this team of analysts, Pierre. What do you think is going to be so disappointing?
Well, what's going to be disappointing is the aftermath of how successful 2018 has been. Our perspective is that the iPhone X has been extremely successful, very well received by consumers, and to such an extent that we think between 10 and 20 million consumers actually brought forward the refresh of their iPhone, the replacement of their iPhone, because they were attracted by the iPhone X. So that's a great success. Apple probably this year will have sold in fiscal 2018, 65 million iPhone X. We think 10 to 20 million of these are actually brought forward demand. So when you fast forward to 2019, what happens? These people who just bought an iPhone X and do not replace their phone every year are not going to buy a phone. And that's creating an air pocket. And we see a very significant risk on expectations for 2019 in terms of iPhone shipment units, and also in terms of ASP, because of course the iPhone X is a high price phone that drives ASPs up. And as it happens, investors will realize that we are not done with the weakness in iPhone demand. We are like in a multi-year period of transition where iPhone users still like very much their phone and use it every single day, but they replace it less often. And this transition already happened in the PC market between 2012 and 2017, over 5 years. And PC shipments declined by 30% over that period of time. So it's a very long and very tough headwind that weighs on iPhone shipments. And this is something investors have forgotten in 2018. Because Apple did very well with the iPhone X. The problem is that most of that performance is demand being brought forward and calls for an air pocket in 2019.
All right, well, we're seeing a lot of buys, some holds, and you, Pierre Ferragu with New Street Research with the one sell, we'll be watching. Thanks so much, Pierre. As earnings draw to a close, where do some of the biggest names in tech stand? As we go into that crucial fourth quarter, we'll discuss. We'll also get a competing view on Apple next. This is Bloomberg. As we close the book on earnings season and prepare for the fourth quarter, big tech is still at a bit of a crossroads, still making gains this year, but not without some pullbacks in the market. So where do we go from here? Which names stand out? For more, I want to bring in Jim Suva, Managing Director at Citigroup. Of course, I want to start with Apple, because we just heard from Pierre Ferragu at New Street, who now is recommending sell, saying that Apple is going to be a material disappointment in 2019. You still have a buy rating on the stock. Why?
Well, we actually have 5 reasons, Emily, why we think Apple can grow higher and trade up higher from here. One of them is actually what people are not looking at, and that is growth outside the United States, specifically in India, where Apple is setting up a supply chain all in India to start to avoid some of those import duties and taxes, where a phone in India can be several $100s more expensive because they don't produce locally. And we think that will happen in 2019. Also, we believe the servers...
Hang on. That's interesting because, Bloomberg just published a story about India where it talked about the major struggles that Apple has had in the India market, and that they are way behind Samsung and Xiaomi and local competitors.
And that's what gets us very exciting. Their market share 1% in India. So it's tough to lose more market share when you're that low. And compared to China, they have about 14% in China. Once they set up production locally in India, then the prices of their phones come lower because of the tax and import duties that go onto it, and people can afford the phone in India. We're not talking the fancy phone that you have now. I know you have the iPhone 10, the really fancy high-end one, but we're talking more the iPhone SE and the iPhone 5 and 6, the older models that are new introductory consumers to the net edition. So we view it as an opportunistic 2019 story.
What about the fact that this might be the end of the road for the iPhone, that we're seeing the market saturate and Apple doesn't have another iPhone hit down its, sleeve, up its sleeve, I mean?
Well, you're spoiled. You live here in San Francisco where you get the latest, newest technology all the time, and it's adapted into your home and your life every day. A lot of the other parts of the world, which outside the United States, are still getting these phones for the first time, and we believe Apple still has growth opportunity here. Beyond the iPhone, we believe things such as their EarPods, Apple Home, Apple TV, and content over time are eventually going to catch on. But you're right. Here in San Francisco, it feels like you've seen it all. That's because you live in the center of where the innovation's been happening.
We've seen a pullback from that $1 trillion market cap. Do you think Apple will go back there and more?
I think they're actually going to buy back a lot of stock on this weakness. They bought back some stock last quarter, and they have announced a $100 billion stock buyback, which is about 10 to 12% of their market cap. We think that they're going to be buying back the stock on this weakness.
How much do you think the weakness in Apple is impacting the broader tech markets, or could it be Tesla?
Well, we can talk about Tesla in a minute, as you mentioned, but overall, I think people are a little afraid about the geopolitical environment. The tweets that go out from the presidency, the uncertainty of the trade wars, and the one tweet goes out one time, another tweet another time, and all of a sudden there's trade war concerns. Trade wars cause higher prices. Higher prices cause a stall in demand. That's bad for technology overall. We don't want to see consumers hesitate their purchases.
So what about Tesla? I mean, and I know you don't cover Tesla specifically, but is the volatility around Tesla in particular having a broader impact?
Well, I think what's very interesting is Tesla has been very disruptionary. Many people thought the company would be a big failure and doesn't stand a chance. Now we're finding many other companies trying to catch up with it. The cars that you drive today, the backup cameras, the sensors, the beeping, the collision prevention, a lot of that has come out of the innovation from Tesla. Tesla, we believe, is shaking up the supply chain, the designs, the future cars of the future who come out to make them more consumer safe. And we believe that it's actually a good thing for the industry because in all those cars, more technology, more sensors, more connectors. That's good for technology.
But what about all of this hubbub about going private or not going private and Elon Musk's questionable state of mind?
I think the biggest thing you take out of this is how complicated it is to put together an item like a car or a PC, and the supply chain is so complicated. If they don't get the right parts at the right time at the right place, the assembly line comes to a scratch, to a stall. And in doing so, be able to meet all of your deliverables, your milestones of what you want to produce and come out is very challenging. Specifically for a car, you mentioned Tesla. All the car makers have to have the right color, the right fabrics, the right electronics, all at the right time. Tesla shows how complex these items are to put together, and we think that it's exciting for technology.
So quickly then, in terms of the broader tech market, where do you expect to see the most pressure through the end of the year? Is it a consumer technology company like Apple? Is it a company like Tesla? Is it social media? Is it chip stocks, which we've also been seeing pressure?
Well, I think what's important is about expectations versus what the company's guided to and where people are going to come out through it. So when we think about it, we do see some definitely secular declines, such as in the printing area. People are printing less pages at home, so that area is under secular decline. We are seeing also that consumers are purchasing more things online as opposed to going into bricks and mortar stores. So those stores have to really adapt their strategy to have a good price point and online shopping experience. Out of all this, a lot of people say personal computers were going to die and go away. We just had the best PC growth in 6 years. And that is all underscored by employment. Whether you're in San Francisco, New York, London, Hong Kong, anywhere in the world, employment trends are strong. So we're opportunistic for the second half of this year.
So I still got my laptop for sure. Where are you most optimistic about?
We're most optimistic actually about some of the networking stocks such as Arista and Cisco. And this is because when companies like Bloomberg hire people, they typically have to put in a lot of infrastructure to support them on their email, on their badges to get into the building, on the ability to communicate via Wi-Fi and phones. Cisco and Arista are going to benefit from that, and plus what's 5G, which is in the future yet to come.
And what about social media? It's obviously very controversial, whether it's Twitter or Facebook, with the election coming up.
Well, to be honest, what has all happened definitely is kind of sad, but it also shows the importance of Apple has taken a big stance. They will not share their data. They will not let you use their ecosystem and their products for free in exchange for giving up all the information of where you are and what you do. Apple has drawn its line in the sand, and we're finding that's coming back actually to help them, not to hurt them. A lot of people click the box. Yes, I accept these terms without fully reading them, and soon they discover that all of a sudden there's a lot of people watching where they are and what they're doing, and I think the consumers are becoming more sensitive to the privacy of what they give out.
All right, Jim Suva, Citigroup Managing Director, always great to have you here on the show. Thank you. Much more coming up, and Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. First Lady Melania Trump told a cyberbullying conference that social media can be used in, quote, many positive ways, or it can be, quote, destructive when used improperly. She was speaking at a conference attended by tech companies like Google, Facebook, and Twitter. The First Lady used her time to highlight her Be Best campaign, saying it will focus on teaching the next generation how to, quote, conduct themselves safely in a positive manner in an online setting. Her remarks come after the president last week called Omarosa Manigault-Newman, former White House official, a dog and a lowlife. Several of the world's largest digital exchanges have joined an effort to stamp out bad behavior in the cryptocurrency industry. The Virtual Commodity Association was created by Bitcoin investors Tyler and Cameron Winklevoss. Among the exchanges signing up are Bitstamp, Bitflyer USA, and Bittrex. The aim of the organization to develop industry standards, promote transparency, and work with regulators to prevent fraud and manipulation in digital asset markets. And the groundbreaking movie Crazy Rich Asians was the box office winner in North America over the weekend. The first Hollywood movie in almost a quarter century with a largely Asian cast took in $25.2 million. The shark movie The Meg came in second at $21 million. Coming up, Tesla versus the SEC. We look at how the regulatory agency could be standing in the way of Elon Musk's dream of taking Tesla off the public market. That is next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Cheng in San Francisco. It was the tweet that started it all. I'm considering taking Tesla private at $420. Funding secure. Period. With those 61 characters, Elon Musk turned Tesla's world and his own upside down. Since sending that tweet 3 weeks ago, the stock has been on a roller coaster as everyone tries to figure out what is going on inside the electric car maker. And one of the most anticipated questions is, what is the SEC doing about this? Since that tweet, there have been multiple reports about a possible inquiry. So to try to get an insider's view of what goes on at the SEC at a time like this, I'd like to welcome Teresa Goody, CEO of the Goody Group. Before founding this international business consulting firm, she was an attorney for the SEC. Teresa, thank you so much for being here. So we don't know a lot, but it does appear that the SEC is moving quite quickly here with this subpoena already sent to Tesla. What does that tell us about the possible level of seriousness of this inquiry, or information gathering, if you will?
Well, the inquiry is already pretty serious if they're issuing subpoenas, so that means that there is a formal investigation in place. And after the voluntary request, once there's a formal investigation, that's when you actually get the subpoenas. So the SEC is indeed acting very swiftly, as you said, and quickly here, and pursuing this investigation full force ahead, it appears.
What is the most problematic part of the tweet? Is it simply those two words, funding secured?
Well, there's a few different steps here of problems. So the funding secured, saying that you actually have funding secured when it's not, that's problematic because it's not true, which is fraud. And so that would be a fraudulent statement. There's another rule saying that you can't say you're going to make a tender offer if you don't indeed have the funding to do so or reasonably believe that you do. And so saying that was problematic. And then the blog indicating, that funding wasn't secured. And then the New York Times, that interview was also alarming also in the fact that it appears that the $420 per share offer price was really arbitrary. It wasn't based on any kind of analysis. And then it was better karma for $420 rather than $419. So that was problematic. And then additionally, what was extremely alarming to me in that interview was that Elon Musk still doesn't seem to think that he did anything wrong and doesn't regret his tweets, which I think the SEC is going to look at that very seriously as somebody who's continuing to act in this reckless manner without any idea or concern about what he's done.
Now, what penalties could Musk himself face as well as the company face? Because as I understand it, each violation or each false statement to each person to whom it is made could count as a separate infraction.
You're exactly right there. Every time he made a false statement, that itself is a separate violation. And fraud carries with it not only civil penalties with the SEC, but there's also potential criminal wrongdoing with the DOJ. And then you, of course, already have the shareholder lawsuits here. And another impact that this could have with the SEC is if they do, in fact, bring an enforcement action against him and they do settle, they could also require admissions. And so admissions of guilt here, which would also have an effect in the shareholder and the criminal suits as well.
To each person to whom it is made, does that include multiple different shareholders, or is one statement one infraction, if you will?
Well, the one statement would be the infraction, but then the egregiousness and the impact of it is based on all of the various shareholders who were injured. And so here you have a very dramatic and extensive financial harm. I mean, we saw the wide swings with the share price, and so you have tons of money that was lost by the shorts. You have tons of money that was lost by those who bought shares, thinking that there was funding secured for taking this private, and it seems as though funding is very far from secured, and so you have them losing money. So there's each violation of the statements, but also the collective huge financial ramifications from this.
The subpoena also demands information from each of the board's 9 directors. Could any of them be liable?
Indeed, they could, and the company could be liable itself. And so we have here Elon Musk, who appears to have gone off on his personal, on his own personal way of doing this and saying all of these in his personal capacity, but he also is the CEO. And then once he makes these statements, then the board collectively also has fiduciary duties. And so I was a little surprised that I didn't see them make a very quick corrective disclosure under Reg FD as soon as these tweets came out to clear up the confusion and the chaos in the market. So they could also have some liability there. And then the SEC, it does not look at anything in a vacuum, so it's going to be looking into everything, and including these communications. And so if they were aware of the tweet before it happened, or what was going on afterwards, if there was any intent that's there, you can see if there was anything untoward, whether they were trying, there was some effort to have an impact on the stock price, and there was an intent there, whether or not they reacted reasonably and responsibly. And so you do also have the board having these responsibilities and acting on behalf of the company, and could have liability itself, as well as Elon Musk. It is noteworthy that Chairman Clayton of the SEC has indicated that to him it is more important to go after the individual wrongdoer, but by no means do I think that excludes the possibility that the SEC could bring an action against the company as well as Elon Musk.
And when you say there could be criminal ramifications here, does that mean, what could that mean for Elon Musk personally? I mean, could that mean jail time?
It's possible. That is a possibility. And with fraud comes the possibility of jail time as well as fines. And so fines are generally the means that the DOJ takes more often than jail time, but it is definitely a possibility. And here you're going to look at the egregiousness, any intent that comes forward through this investigation, and they have, tweets to Snapchat to Facebook, and who knows all the different means of communication to try and gather that. So there's a lot of investigating that has to be done here. And another consideration, too, is, as I said, the SEC does not look at anything in a vacuum. So this opens up Tesla and everybody involved to extreme scrutiny. So they're not just going to be looking at this one issue in the tweet and the funding secured and where this was in the privatization, but they're also going to see what else they run across, and they have to follow the evidence wherever it takes them. And so if they run across whether there was some capital expenditures that would have required the stock price going up now, whether other people who knew the tweet was coming, if they knew it was coming, traded on that information. And so there's a vast investigation that's going to come from this.
Now, there's also reporting that the SEC had, before any of this happened, issued a subpoena to a Tesla part supplier looking into whether they misled about their production problems. How should we take then what's happening now into context of possible additional investigations?
Well, when it first broke that the SEC had already issued subpoenas, it seemed very likely that the SEC already had a pending investigation, because to initiate a formal investigation, it does take a little bit of time, and the SEC was able to move more swiftly here, and so swiftly that it led one to believe that they could very well have already had an investigation underway, because it is much easier to broaden the scope of an already existing investigation than it is to initiate another one and get it to the formal stage of a subpoena. So I think that that's probably very likely. There's been a lot of problematic statements that the SEC has been reported to be looking at, with projections by Tesla and even prior tweets and things by Elon Musk. So it's definitely likely that they're looking into a myriad of various things.
Interesting. All right, Teresa Goody, CEO of the Goody Group, thank you so much for stopping by. Well, Twitter is in the midst of political backlash from the right and the left. CEO Jack Dorsey appeared on CNN over the weekend lamenting the difficult position the company's in, saying if the platform took action on those with right-wing politics, it would stoke already rising concern about the power of social media companies from the left. Can the company and Dorsey endure the backlash without making serious changes to the site? For more, I want to bring in Bloomberg Tech Selena Wang. So give us the highlights, Selena, of this CNN interview.
Some of the broad, high-level issues he discussed here was, A, Twitter is a platform with outsized influence, but we actually don't have that many resources to deal with this problem. Something I thought he said was interesting was, we don't proactively look at abusive content. We wait for them to be flagged to us. So in the case of Alex Jones, the reasons why we didn't take action early was because it hadn't been flagged to us. And once when it was, then we took action. Now, that leads to a whole series of criticism about...
That's not what Facebook does at this point, right? I mean, I know Facebook also has an appeals process where you can flag content, but now they have thousands and thousands of content moderators.
Facebook
correct?
and YouTube have the resources to have thousands upon thousands of these moderators, and Jack made very clear in his CNN interview that we don't have those resources, so you can come and criticize us for that, but we just don't have other options. That being said, I did talk to some critics who said they find it very hard to believe that in the whole interim period in which this has been a subject of debate, that they didn't have people employed to proactively look through them. And the fact that they didn't shows that there was definitely some misstep going on there.
These remarks from Dorsey come a day after the president tweeted, social media is totally discriminating against Republican conservative voices, speaking loudly and clearly for the Trump administration. We won't let that happen. They are closing down the opinions of many people on the right while at the same time doing nothing to others. And too many voices are being destroyed, some good, some bad. That cannot be allowed to happen. Who is making the choices? Because I can already tell you that too many mistakes are being made. Let everybody participate, good and bad, and we will all just have to figure it out. We also sat down with President Trump's campaign manager for 2020, Brad Parscale, who also talked about the liberal bias he saw at Facebook and Twitter. Take a listen.
It's up to me to be a person as a leader in our party and someone that's running the campaign to make sure that those companies are held accountable, that they do everything they can to try to kill those internal biases and to provide an even playing field for this country.
So obviously, both of their points of view make clear what Twitter and Jack Dorsey are facing on the right, and then you have the folks on the left saying, how could you not have banned Alex Jones, or how could no one have flagged that?
I mean, Jack Dorsey has admitted that their employment base is primarily liberal, left-leaning, also primarily young people working in their offices, but that the reason why they're taking all of these steps to create these rules is so that they can combat against these biases and try to make as clear-cut decisions as possible. Now, on the other hand, trying to come up with these universal rules about what is abuse, what is harassment, what is hate speech, that's a very difficult, fuzzy thing to define. In the moment that they roll out these policies, there will always be thousands and thousands of edge cases that don't violate those rules, but clearly are something that many would believe they should take action on. So they're really in a difficult situation where they're trying to be unbiased, but by making policies that are unbiased, they run into a whole host of other issues.
Quickly, he talked about a lot of the things that Twitter does badly, but is there any indication that anything is going to change, or that they're going to do anything differently or change policies?
Well, he did say that he's willing to fundamentally rethink a lot of the core parts about the platform. For instance, they would consider de-emphasizing follower accounts, which has led to a lot of fake followers, bots, etc. And they've also considered adding more context around tweets so that fake information doesn't spread as quickly on the platform. That being said, we have known historically that this company moves extremely slowly, and they've had adequate opportunities to make changes, and we still haven't seen fundamental shifts. But hopefully we will see those soon.
All right, Bloomberg's Selena Wang, thanks so much. We should note Bloomberg LP operates a global breaking news network on Twitter called TikTok. Coming up, is Netflix trying to reinvent the wheel? The streaming company is testing out video promos between episodes, but users say these are commercials. We're going to discuss next. This is Bloomberg. Now, Netflix is exploring new ways to promote its content. The streaming giant has confirmed it's now running video ads for other Netflix series between episodes, or as a number of Netflix users have called them, commercials. Users are complaining these promotions cannot be skipped or muted, but Netflix responded saying the company was not adding commercials and merely testing promotional videos, which could, in fact, be skipped. So, will this test of promotions draw viewers closer to the content? Joining us to discuss from Stamford, Connecticut, Andre Swanston, True Optics CEO. Also with us, Bloomberg's entertainment reporter, Lucas Shaw from LA. So, Andre, I was watching Netflix over the weekend, and I saw one of these promos, ads, commercials, or whatever you want to call them, between episodes for a completely unrelated series. It was a little annoying, but that said, isn't Netflix entitled to do this?
I mean, Netflix is definitely entitled to do it. I think it's more about content personalization and recommendations and keeping users engaged more so than trying to monetize via advertising, which is what everybody's talking about over the last 24 hours or so. But it's something that I think, if they can get right, could be valuable to consumers.
Lucas, Netflix is spending a lot of money on marketing. If they could figure out some, other and cheaper way to market their shows, wouldn't that be a huge bonus?
Yeah, it's important to remember a couple things. One is that other networks that are ad-free like Netflix already do this. If you're watching HBO, HBO promotes its shows before and after you watch an original one because it wants to remind its viewers what else they have to offer. And then for Netflix, which is just making so many shows, these promotions are, if anything, a sign to talent. There's been some murmurs in Hollywood of late, people feeling like their shows get lost on Netflix because there's just so much new coming out every week. And so if Netflix can find a few other ways to remind its viewers of the new product, that seems like a win for everybody, especially since Netflix lets you skip all sorts of things already, like the introduction to a show.
I do wonder about this, Andre. We've talked about whether we're in a TV bubble, and it seems like there are just so many shows, we've never even heard of because there are just so many. Do you think some good content is getting lost?
Absolutely. I think there's good content that people can't find on Netflix or Amazon or Hulu or any of the other destinations across over-the-top or even traditional television. One of the things that a subscription-based network like Netflix, I'm sure, looks at is what impacts their churn and audience retention. And one of the things that people talked about years ago, which was binge viewing and people watching multiple episodes of the same show continuously. But one of the things that we found in data with some of the subscription networks that we work with, it's actually watching multiple shows is more of an indicator of people keeping a subscription. So I think one of the things that this could also help is then mitigate churn rate as well as allow consumers to find new content.
Now, Bloomberg is also reporting that Amazon is working on a live TV recorder that would circumvent cable companies and plug into the Fire TV box. Is this something, Andre, that you think is going to give Amazon a bigger competitive advantage, or more of the same?
Well, it's interesting for a couple reasons, right? So linear television and OTT are converging. You have solutions like the TiVo Bolt as well as Xfinity's X1. So it seems like it would just be a natural evolution of Amazon's kind of go-to-market strategy to really attack television, to allow people to do both. But it's not overly exciting to me in any way, to be honest. There's no big differentiator.
Lucas, on that note, then, is it content that still decides who's king? I mean, and could that crown easily be taken from Netflix by anyone else who does a hit show, or is Netflix just making so many that it'd be difficult to steal?
Well, everybody's spending to try to take the crown from Netflix. So you bring up Amazon, they spent a fortune on the rights to Lord of the Rings. They've bought a bunch of other projects. Apple is now spending hundreds of millions, perhaps billions of dollars. Disney's getting started with its streaming service. So there is an arms race happening in Hollywood right now. Most people seem to believe that there will be anywhere from 3 to 6 services that can thrive. There doesn't have to be one winner. But Netflix is certainly facing more competition online than ever before, both on demand and from new live services.
Andre, would you agree this is not a zero-sum game? And if you had to choose 3 to 6 services, which ones would you choose to be the winners?
Well, I'm probably not going to disclose which the 3 to 6 winners, or else the other 50 clients we have might be pretty upset, since we work with a lot of these companies. But what I will say is there's absolutely, and this is something I've talked about for years now, Netflix has no real competitive advantage relative to a tech barrier to entry. They have a lot of content, but still none of the content that they have holds the type of value that say Disney has with some of their original content. And so I do think that it's going to be more and more expensive for Netflix in terms of not only licensing content but also producing original content. And exactly, everyone's right. There's definitely going to be an arms race, and which is for the consumer a win-win.
All right, True Optics CEO Andre Swanston and Bloomberg's Lucas Shaw will continue to follow the streaming battles. Coming up, a Bloomberg scoop: Apple is revamping its lineup of Macs. Details on that next. This is Bloomberg. Bloomberg scoop: Apple plans to release a new low-cost laptop and an upgrade to the Mac Mini desktop later this year. Here to tell us more, Bloomberg's Mark Gurman joining us from LA. Mark, of course, who else? But you broke this story. What do we know?
Thanks for having me. Well, we know that after years of sort of a drought to revamped Macs, after quarters of lower than expected sales, lower than previous sales, Apple's planning 2 revamped Macs to their lower end of the line. A new version of the Mac Mini now geared toward pro users, as well as a new MacBook that's destined to eventually replace the MacBook Air. This is their lower cost, sub-$1,000 laptop. They'll be adding a Retina display and thinner edges to the screen to this year's model.
The MacBook Air, got a lot of buzz. What's the significance of them adding a lower cost laptop now to replace it?
Right, so what Apple's basically seen over the past few years is that their Pro users are not really loving their MacBook Pro. They've been updating it to try to mitigate that problem. They tried to do that in July with this new MacBook Pro update, but it sort of fell flat. There was concerns over the changes made to the keyboard. There was concerns over the speeds of the devices. They ended up issuing an apology and a software update to fix some problems regarding the performance of the latest MacBook Pros. And at the same time, they've seen competition from HP and computers running the Chromebook operating system from Google, really gaining market share and lots of sales from both professionals and consumers, in addition to education customers. And this new laptop is sort of their response to that. And it's interesting because Apple sort of pioneered this consumer laptop with the MacBook Air. Back in 2008, Steve Jobs actually introduced it. He pulled it out of a yellow manila envelope, and now 10 years later, it's getting a significant overhaul with this year's model.
How does this fit into the upcoming phone lineup and, add to this sort of family of products?
Right, so what Apple's planning for this fall is a very big blitz of new products. They're going to be hitting several different markets, several different product categories over the next several months throughout the end of the year. That will be including new versions of the Apple Watch with edge-to-edge larger screens, 3 new iPhones, obviously these Macs and iPads, all sorts of cool new gadgets for the Apple faithful, but also consumers at large. So it's all part of this bigger new product rollout strategy for 2018.
All right, Mark Gurman with us from LA. Thanks so much, Mark, for bringing us that scoop. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. We'll see you back here tomorrow. This is Bloomberg.